What's going on, guys? In this video, I'm going to recap my long and short of GME, that's GameStop. As you can see here, around 1.3K and change profit. And I'm going to break down my thought process here. So the small caps, which I generally, trade, have been dead this week. I decided to give this a shot, and I generally don't recommend trading these quote legit companies with higher floats because the edge just isn't there. Retail traders, um, you know, tend to stay away from these. These tend to attract more big investors. So, and they usually don't offer the range, and they're pretty choppy. So I generally don't think it's a good habit to be trading these. However, today it did offer a lot of volatility and range. It spiked from $20, so it was up around 100%. And so, I decided to give it a crack with some of my strategies that I use for the small caps. So the first trade on GME was actually a long. So I saw this ripping in the morning. I waited for this high right here to be tested, right? So I see some candles here, meaning the shorts were trapped. I waited for the test. I went long, and based on some statistics I've tracked, generally the bouncing percentage on these higher floats isn't as high. So I sold quite conservatively, right close to the pre-market high, for close to 10% profit. But of course, a little frustrating to see that it went all the way to 38. So I could have had 40% profit, but that's just following the statistics on these stocks. You can never predict that they're going to go this crazy. So I had no interest in shorting this until I saw this just completely go supernova and rip up all the way to 38. Even though this is a legitimate company, this type of move is not sustainable. There's not enough liquidity and enough money to keep this stock at $38, right? And when you consider the golden rule, 90% of day traders lose money. People are chasing this stock when you just see straight green from 35. So, I took a couple cuts on these stuffing candles. I thought, here, this one was going to crack. So I took some small starter size losses. But then once I saw this stuff right here and this red candle come in, I sized in more, and I covered right into 32, knowing that it would bounce, and actually went long again. So this is kind of like a washout long strategy, kind of like a panic dip buy. So this is kind of similar to the strategies I use for small caps. I just am more conservative with my profit taking. So I knew more or less where this was going to bounce off of. So I actually went long again, sold at 34. So, not scalping, but, smaller percentages. And then knowing kind of more or less where this is going to fade, I went short again with a little bit of size. So these were all little entries. It's not scalping. It's kind of just, this was a big move. The bounce was about 10%, and this short, was a good 15%, and these were little tiny scalps to help pad the wallet a little bit. So overall, I'm very happy with my execution on this trade. The fact that I recognized where to enter and exit. Again, I don't generally recommend trading these. You develop bad habits if you start trading different types of market caps, different types of floats. They react quite differently, but, when the market's completely dead in the small cap sector and you see something, in this sector that's just ripping, going crazy, and this move cannot be sustained, it's nice to take advantage of those opportunities. But generally, like I say, it's best not to trade these. Anyhow, if you guys are interested in my small cap strategy and want to join the free chat, check out the link in the description. If you learned something from this video, please drop a like. I would appreciate it. And subscribe for more content. Thank you for watching.